Thanks for joining me. I'm pretty sure more people are gonna chime in as we go on. I know there's always a few late starters. So what I want to do is really just this is the first sort of webinar I've done in the property space this year. Everything else that I do is pretty much private coaching behind the scenes. So I'm really excited to put this on and share it on the multiple platforms that I'm sharing it on. We've got it going live on YouTube, podcast, Instagram, and obviously on Zoom as well. I wanted to do this because I feel like there's a big shift has happened in the Airbnb industry over the last 2 to 3 years, and I'm seeing a lot of stuff online and I don't necessarily agree with it. And I kind of have a very unique model that I've leaned into over the last few years, which I kind of want to give you an insight into to try and steer people in the right direction. Because I think building wealth through property is an amazing strategy. And I personally believe that short-term rentals is the best way to do it. Having, done everything, HMOs, buy-to-lets, developments, all that sort of stuff. But I do feel like there's a lot of mistakes you can make, and I have made them. So I'm going to kind of steer you away from that as well. So just a bit of background on myself, just in case you're not familiar. I started in 2019 buying property. I have had over 450 Airbnbs under a portfolio, managed, rented, and owned across 2 continents at the peak of it all. So all throughout the UK and in Dubai as well. I had 80 staff at its peak. We've hosted over 250,000 guests. I currently have an £8 million property portfolio that I own. I've had over $1 million in rent going out in 1 calendar year at the peak of my rent-to-rent portfolio. And I have probably blown over 2 million taken on the wrong properties. And that's really what I want to lean into today. I think a lot of people say a lot of things online and it's all positive and this and that and the other. And I think that's great, but not many people actually give the negatives. So I really want to, bring home, I am very real and raw on what I do. And I'm going to give you some home truths about this entire industry as well. So yes, if you are on Zoom, you can ask questions, drop them in the chat, and I will come back to them at the end. So as we go through this, please feel free to drop them in the chat. So it's safe to say that given what I've just said, everything I will be discussing, I can back up. Unlike some of the advice out there from some people, I have done it. I've got the t-shirt, I've got the mistakes, and I've paid the lessons for it, and I've also had the success from it as well. So so you can take my advice as you will, but it's safe to say that without being arrogant, if there's something in the short-term rental space, I'm pretty clued up on it, and I know what I'm talking about. But I also have a very unique model, and that's kind of what I want to sort of position today for everyone to think about, which works. And that's not come from chance. That has come from trial, error, experience, running all different types of models and landing on something. And that model works for me. I'm not saying that my model is the only model, and I'm not saying that there is only one way to skin a cat in this game, because there's not. For many of you, I'm also a business coach, and I coach online coaches. And again, in that industry, there are so many different ways to build a coaching business. There's so many different ways to build businesses. One thing that I encourage all my clients is to lean into a business that works for them. So if you want a portfolio of 1,000 managed properties, and you want hundreds of staff, and you want to operate globally, and that works for you, and you want to give up your life to do that, then fine. But this is not for you, okay? Because I've been there, done that, and it didn't work for me, and I didn't enjoy it. So what I've done is scaled it back to a point where I can have freedom, but also have the wealth. And I think for me, that is the ultimate portfolio to have, and the ultimate business to have. So that's kind of where I'm going. So if you are like into I just want to, blow this short-term rental game up, I want to be, the next Sonder, then this webinar probably isn't for you. So I'll save you 45 minutes and you'd be better off checking out now. So let's just dive into the different strategies. Okay. So we have management, which is is generally perceived as low cost, low risk, easy to pick up volume, and on average, you will make around £200 profit per unit. On the rent-to-rent model, or rental arbitrage, as it's called everywhere outside of the UK, medium cost to get into, high risk, easy to acquire or easier to acquire than purchasing, most think anyway. And the average profit per unit is around 400 on the mass model, as I call it. It's 800 to 1,000 on my ContractorBnB model. And then we have purchasing, which is obviously high cost, but it is low risk. The thing with this model is you need to know what you're doing to acquire the right property to attract the right investment. Otherwise, it's very difficult. The average profit for the mass model in the short-term rental game is around 1,000 to 1,200 per month. On my ContractorBnB model, you're looking at around 2,000 to 2,500 per month. Okay, so that's kind of the industry, and they're the three types of models that most short-term rental hosts will run. Most people will go into rent-to-rent first because they find it easy, and they see it as a low-risk strategy when actually rent-to-rent is the highest risk strategy. What happens is they get a few under their belt, and then they decide that they will go into management, thinking that that's quick win, no risk and money, whereas that is actually, and I'm going to explain why, but that actually covers a lot of risk and is possibly the worst out of all the models. And again, I'm going to explain why. And then once a bit of funds have built up, they'll then start purchasing. And then you realize that purchasing is actually the most profitable and the best model. But obviously it is the slowest, and it takes more time because it's not easy. Even if you had tens of millions at your disposal, it's quite difficult to find the right properties, refurbish them, get them over the line, and all that sort of stuff. So what I want to do is just kind of today is just giving you my honest opinion about how I see everything, about where I think you should be investing your time and effort, and giving you some real ideas to think about versus the general shit that you see online, where it's like, you know, buy this deal, it's the most amazing deal, it's got 80% occupancy, blah, 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 you know, and all this rent-to-rent stuff, and, you know, go into management because you're going to, you know, build a portfolio, learn loads of money. Like, it honestly, it doesn't work like that. And I think it's important that we cover off why. So here's my honest opinion on all of the models. And as I said, this comes from basically doing a lot of this. So I had a huge management portfolio with a lot of stuff. I've had a huge rent roll, and obviously a lot of stuff to manage that. And obviously I've got a fairly decent sized portfolio that is now fully run on short-term rentals. We've got rid of all of the tenants, got rid of all the HMOs, and it's all short-term rentals. And the information and the data that I've extracted from it has allowed me to pivot in the right way and see what works and what doesn't work. So this is not just my opinion. This is also analytically backed, okay, from hosting over 250,000 guests and having everything that I've had over the last 4 years. So for me, management is not low risk. Management is actually medium to high risk. And the reason being is that management increases your staff and your software costs. So the more management clients you bring on, the more properties you're going to have to fulfill, the more turnovers that you're going to have to do. Therefore, the more staff you're going to have, and ultimately the more hassle you're going to have. Okay. So for me, when you actually look at the model itself and break it down, it is actually medium to high risk, because when the economy turns and landlords bail on you, which will happen. It happens every single time in seasons. So in the UK, between probably the end of October, early November and February is when you lose your most management clients, because naturally the market disappears and bookings are shite. So the first thing they do is blame the management company, and then they'll switch thinking that they're going to get a better result somewhere else. But really, you can't force a market that's not there. But as a management company, all you can do is honor the terms of your contract. Most of you will probably have 30 days notice. So they will give you, they'll give you notice. What tends to happen with managed clients is they don't honor their notice periods. So they just take the keys off you, or they just take the properties back off you. So you're then left with the staff to pay for. and the software costs still to pay for. Even if you've got, you know, a month-to-month software costs, you're still going to have probably a 30-day billing cycle, so you will still get hit with the costs, okay? So when economies turn, so we saw it with the utility bill hike in the UK. We've seen it with, you know, various things that have happened in Dubai with sort of the average rents of tenancy portfolios going up. So landlords just want to do that. There's so many different factors that will switch a landlord on and off like the drop of a hat, and they don't give two shits about you as the management company and the fact that you've leveled up your staff costs to support all these properties that you've brought on. So management for me is actually medium to high risk. If you haven't got your accounting together on your management, you will blow a month's profit in one mistake, if not more. And what I mean by that is if you just don't bill out a certain maintenance cost, it could be a couple of £100 boiler fix or a couple of £100 plumbing fix or whatever, that's your profit for the month. You know, and if you've got so many transactions coming in and you're not on top of it, as you build in your management portfolio out, one small accounting mistake could blow your profit from that property for that month. That's how fine the margins are on management. Chargebacks after a client has left can wipe out 1, if not 6 to 7 months worth of profit. And what I mean by that is a client leaves you because it's winter and you're not getting any bookings. So they leave you. And then 3-4 months later, or 2-3 months later, you get an Airbnb chargeback, or you get a credit card chargeback. You try and chase that client for that money. Good luck. So who has to swallow it? You do. If it was a big booking, £800, £900, £1,000, guess what? You're swallowing that cost. That's like 5-6 months worth of profit for most management businesses per client, per property, right? So management is not low risk. It's low risk in the fact that you don't really have to put any money in at the start to get going. But if you want to scale a management business, which you do, that's why you get into management, because you need volume to make it work. You have to add staff. You have to add costs. You have to take on these risks of all of these things that, you know, are going to potentially, you know, take the profit back out. The hassle for management clients is off the charts, right? And you've got hassle from staff, you've got hassle from the landlords themselves, you've got hassle from the guests. And most of the time, the properties that you take on are not suitable. They are high turnover properties, which means more staff, more costs, more hassle, more guests, and the whole thing can drive you insane. Like, I've been there, trust me, my phone never stopped. Even with a team of 80, my phone never stopped, because the managers needed decisions. You had it, like, it was constant. It was constant. Okay. So management is great if you like the hustle, if you are organized as hell, if you take on the right, everything I'm talking about here, right, is taking on the right properties. Like, I still have management, right? I still have rent to rent and I have own, but it's the right properties. Like, I actually got an inbox DM yesterday or the day before saying, I've got, you know, these properties, will you take them on? I was like, what are they? Studios, studio flats? No. So, like, but me 4 years ago would have been like, yeah, just bring them on, just bring them on. Okay. So what you have to do is make sure that the property's right. And that's the main theme today, is the property. It's all about the property and getting the right property. Now, another risk of management is it soaks up a lot of your time away from income generating tasks. The amount of time that you will invest in building and scaling a management business will take up so much of your time that you could be diverting in a much better way. And I'm going to come on to where towards the end of this. It's not even funny how much time a management business can take up. So don't think that management is low risk, because it's not. I would actually say management is one of the higher risk property strategies in the game. Okay. Yes, okay, you're not having to put any money in at the front end to get going, and that's why it's perceived as low risk. But all of the risks of how much time it takes away from your business, the increased costs to your business, the increased hassle, the increased stress, that for me is a high risk business. Next, we've got rent to rent, rental arbitrage, as it's known everywhere else in the world. So the highest risk out of them all, 100%, is rent to rent. This is the riskiest business that you can get into. And for me, my personal opinion, having blown a lot of money on rent to rent, it's not worth it unless you're running the ContractorBnB model. And again, I'm going to come on to that later, but this is the only model that works on rent to rent as far as I've seen. And as I said earlier, I have had over £1 million per year in rent roll across studios, 1 beds, 2 beds, large houses, blocks of flats, hotels, everything. So I've got the data that tells me what works and what doesn't work. And I'm not saying that, as I said at the beginning, this is just my opinion based on what I have seen from my data, my portfolio, my mistakes and my moves, okay? And also the success that I've had. So it's important that you take this information as you see fit. But from my point of view, I think rent-to-rent is the highest risk strategy. And I don't think it's worth doing unless you're running the ContractorBnB model. As you're building your rent-to-rent portfolio, then obviously VAT will kick in. So you need a higher margin to make this work from the start. And I do not think flats work on rent-to-rent. I don't think flats work. Even luxury flats, I think, struggle. You may get some locations, but I've had them all. We've had the 3, the 4-bedder, well kitted out luxury apartments on the Palm, in the middle of Dubai Marina, all that sort of stuff, right? They do not work. Okay, so flats do not offer the high margin that you need in the UK, especially to give you when you've got your VAT kicking in, when you've got your tax kicking in, when you've got all these other costs kicking in. Okay, now at the start as well with rent to rent, you will rely on too many external factors to guarantee this model works. And the problem with most of like this business model rent to rent on its own is, people started because they see it as an easy way to get into property. They see it as a low risk or a low cost way to get into property. It is by far the highest risk, and the cost of it is huge if you get it wrong. And also, because you might say take on 1, 2, 3 properties, you're not going to get a team of cleaners, maintenance guys, get your own linen, all that sort of stuff. Therefore, you are relying on these external factors to guarantee that your business works. And I'm telling you now, no matter how good of a cleaning company you might be working with now, they will let you down. No matter how good of a linen supplier you have, they will let you down. No matter how good of a plumber, an electrician, a handyman, they will let you down. Until you get full control of your entire business, you cannot scale a short-term rental business, okay? And relying on an external team to fund, to make sure that a already high-risk business works, for me, is just madness. And that is where I blew a lot of money. And it's where I'm seeing a lot of people blowing a lot of money right now. Online, I see it in the groups, people whinging, but you look back at what their portfolio looks like. The amount of DMs I get saying, will you take this portfolio off me? Will you take this property off me? And I just look at them and say, absolutely not. And I can see why, blocks of flats or number of flats, they're all flats, and certain houses as well. But they're also just not run correctly as a business behind the scenes. Now, rent to rent is good for cash flow. And, it can scale a rent-to-rent portfolio as a complementary strategy to purchasing. I don't think you should be using rent-to-rent as your primary strategy. And again, I'm going to come on to that in a second and what else you can do versus, running the rent-to-rent. But you cannot use it. It's great for cash flow if you have the right properties and if it is a complementary strategy to your purchasing and you have full control of every single element of the business. You've got your own cleaners, you've got your own maintenance, you've got your own linen, all that sort of stuff. Anything that relies on external, on a high-risk model, you're just asking for trouble. And I found that trouble. It was painful, but luckily I had other areas, other income streams that wash out the trouble from my purchases, okay? When you have full control of your business and you know what you're doing, then this game really gets momentum and you can really get behind it. Now, the final model that you would run is obviously purchasing. So buying assets for short-term rental. Now, this is the lowest risk strategy by far. You own the asset. You can pivot if need be at any time. You have a massive margin. You've got the highest profit margin because obviously a mortgage is much cheaper than a rent. And you have the long-term benefit of the equity growth as well. Worst case scenario, it doesn't work. You can sell the house and make a profit. There's so many different things, escape routes, should we say, when you are purchasing. Now, my model, and the reason that I believe that this is the lowest risk, the highest profit, and the best model is I've withstood what I see as 3 major economic changes now on this model, on this strategy. One was COVID. Still, we survived COVID. We made profit in COVID with our owned properties, okay? We survived the utility hike in the UK 2 winters ago, when, that put a lot of people out of business. We will manage to, swallow the increase in costs and ultimately still turn a profit. And the most recent is obviously the mortgage hikes. We've been able to swallow that and ultimately pivot, increase our prices, so on and so forth. But with an owned portfolio, you get to do that. And also, it's not just an increase in prices that I've been able to do that. I've been able to cut out a lot of the costs in my business because of the model that I now run. So I've gone from a team of 80 to a team of 10. I've gone from working almost full-time in the business to doing nothing. Okay. I literally just do funding documents now for the new purchases that we're bringing on and just manage at a very, very high level whenever I need to get involved. And that for me is the freedom wealth business that everyone should be building and everyone should be chasing and everyone should be focusing on. But the problem is most people focus on just quick wins. It's the same in the online coaching space. When I'm coaching in that space as well, I see it. Everyone just wants the quick cash. They don't think about the long-term foundation. They don't think about, how to actually build a proper business out and just be patient with it and take the time so that they reap the rewards 3 years down the line, 5 years down the line, 10 years down the line. Instead, they go for the short, quick wins, and they're just up and down, up and down, up and down. Make some money, lose some money, make some money, lose some money. And I've done this, right? So I'm not like saying I'm perfect. I've done it. I've learned from it. And I want to try and impart this knowledge onto you so that you don't have to make the same mistakes and you can just have a steady line forward. Now, because you've got higher profit and higher margins in your purchases, even from day one, it's much more affordable in the early days to take full control. You remember we talked about on the rent-to-rent side of things where I was saying, like, you need your cleaners in-house, you need your linen in-house, you need your maintenance in-house. And yes, that's not going to happen with your first purchase, right? But you've got more margin to play with earlier on. So if you're purchasing, that means that you can afford cleaners quicker, maintenance guys quicker, even if they're just part-time at the beginning. You can bring them in and get them in full control. And that in itself has been one of the biggest shifts in my entire business, was when I decided, it was about 2.5 years ago, I was sick of everything and said, you know what, fuck this. I am taking full control of every area of this business. And unless you work for Luke Stays, like, you're not operating in my short-term rental hub. So we got rid of all the external cleaners, we got rid of all of the linen supplies, and we brought everything in-house. And that was the game changer for the portfolio, as well as what I saw in the trends of the property types that were working and the property types that weren't working, the strategies that were working and the strategies that weren't working. Now, the great thing about purchasing is no one can dictate your business. You can't have a landlord come in and say, I want my property back. You can't have a management client ditch you when, the economy turns, or when they just feel like, you're not doing a great job because there's no bookings or whatever, right? You are in full control of your business. You have no one else to answer to. The hassle factor is at its lowest. The only person that you need to look in the mirror and answer to is yourself. You are responsible for everything. You take ownership of everything and you deal with everything. That's how it works, right? So you get to dictate your business. And that for me is the ultimate key of any business, whether it's property, whether it's online coaching, doesn't matter. You get to be in full control of your business. So if I had my time again, so just for those that have joined a bit later, if you do have any questions, pop them in the chat and I will come on to them at the end or shortly. I'm nearly done. But if I had my time again, like, this is genuinely what I would do. And I would encourage all of you to kind of lean into this, get your notebooks out. So I would focus honestly on just buying houses and raising money and nothing else. I wouldn't bother with rent to rent and I wouldn't bother with management. I would just focus on buying houses and raising money. And if I had done that from the beginning, my portfolio would be, I think, 3 times the size now. I got so distracted managing a team of 80, having 2 offices, one in Dubai, one in the UK, flying backwards and forwards, chasing management clients, dealing with management shit, dealing with landlords, dealing with rentals, dealing with issues, dealing with losses, and it all stemmed from rent to rent and management. When I look at my portfolio, I had no hassle from my owned properties. I have not lost a penny, touch wood, on any of my on any of my purchased properties since the day I've owned them. Every single year, every single one of them have produced profit. Can't say that for management, and I can't say that for rent to rents. So I know that if I'd just gone all in on finding money and sourcing the right properties, I would have 3 times the size of my portfolio now. There's no doubt about it. Also, I expanded too far. Just stay in one area. Everything you have is under your feet. It's under your nose. You don't need to set up a business in Dubai. You don't need to scale all throughout the UK. Like I made that mistake. Just stay in your area. For the majority of you, you get 100 houses on this model, you're making millions a year. And 100 might sound like a massive stretch right now, but you buy one, then you buy two, then you buy four, then you buy eight. And that's how it works. You know, I'm in a period now where I'm buying like 12 to 15 houses a year, but they're the right houses, they're large houses, they're quality, and they bring in good revenue. On average, 2 to 2.5 grand a month. So you don't need many of them to actually change your life. And focusing on getting them is, you know, it's crucial. Like let's look at the numbers here. Let's look at like the practicality of it all. If I'm making 2.5 grand from one owned property a month, I need 10 management at £250 a month to make the same money. That's 10 lots of guests versus one guest. That's 10 lots of landlords versus no landlords. It's 10 lots of cleaners to organize, 10 lots of turnovers versus one. You see the difference? But we're making the same money. In fact, we're making more, because to handle the 10, I need more staff, I need more phone systems, I need more software costs. You know, you start adding it all up. It doesn't make sense to go down that route. The sense is owned units. Focus on buying houses and raising money. And your portfolio, you know, even if you just took on 4 units this year, if you one per quarter, which is more than achievable, you know, that's 100K in income that you're also going to get next year, and you're going to get the year after and the year after. But also, guess what? You've probably unlocked 100 to 150K of net wealth, because that's now sat in the properties that you own, and that's growing over time as well. You don't get that with management. You don't get that with rent to rent. So the focus needs to switch for the majority of the industry, as far as I see it. I see so many people going into rent to rent and management because they think it's low risk. They think it's easy. It's not. It's far from easy. It's stressful. It's high risk. Focusing on buying houses, raising money. That's all you need to do. And, you know, there's so many different ways you can do it. But for me, I wish I could turn back the clock and do that again. So by doing this, you work less and you earn more. I've gone from a team of 80 to a team of 10. I've gone from working pretty much 70 hours a week to nothing. Why? Because refine the model down to this ContractorBnB houses that I own, not answerable to anybody else. I stay in one area and I have full control of every single area of the business. So why does the ContractorBnB model work? Okay. For one, they stay for longer. So the majority of our stays are, we're not talking days, we're talking months. We've had some in for like 18 months. Okay. They stay for longer. So less staff, less hassle, more profit. Okay. They come in large groups. They typically, you know, you're not just got 3 contractors, or there's 40 of them, there's 30 of them, there's 50 of them. They just want to deal with one company. If you've got enough stock, they will take all of your properties, or a vast majority of them. They don't want to be doing a contract with them and a contract with them and a contract with them. One person, one invoice, one go-to. If there's any problems, they know they get looked after. It's one. Think about it from your perspective. If you had 70 guys and you had to put them out into a different location, do you want to be dealing with 10 different Airbnb companies? Do you want to be dealing with 10 different hosts, or do you just want one? This is why the ContractorBnB model works. But it takes, you know, it takes time to build it. It takes time to build the brand. It takes time to build the portfolio. But the time is worth the investment, because the long-term payoff is far greater than going into rent-to-rent or management. You have less wear and tear on your properties. The guys are living in the properties constantly. They treat it like their home. There's not like in and outs. There's no parties. There's no stag and endos. There's less wear and tear on the properties. More profit, as there's also no VAT because of the longer booking period in the UK. There's less turnovers. There's less voids. There's no OTA commissions. My direct booking game this year to date is over 82%. Last year, it was 74%. So in the last 2 years, I've probably averaged over 70% direct booking game. I don't know many short-term rental companies that could say the same. And that is where the magic is. I'm not paying 13%, 15%, 18% away to Booking.com, Airbnb. I'm not under Airbnb's bloody air cover where they can just say, do you know what? We're going to take money out of your bank account and give it back to the guest because they found a fly in the bathroom. I'm in full control of the business. And this is what you need if you want to build a short-term rental portfolio that will withstand economic seasons, that will withstand the next 5 to 10 years. We're not talking now. Anyone can build a rent-to-rent portfolio, make money over 12 months. But what happens when costs go up? What happens when landlords want to put the rent up? What happens when management clients want to piss off? It's you that carries the burden of it all, your losses. You know, if you build a rent-to-rent portfolio, you're making loads of money. And I've had this happen to me in Dubai, right? Making loads of money. And then all of a sudden the landlords want their properties back. You've committed to a lifestyle. You've upgraded your lifestyle. All of a sudden your income's been taken away from you. Oh shit. What now? If you haven't got a owned portfolio to rely on, you're never going to be in full control. You actually haven't got a business, as far as I'm concerned. If you're constantly relying on Airbnb for your bookings, you haven't got a business. I could turn Airbnb and Booking.com off now. I don't, because it provides us leads, the right type of leads for our contractor B&Bs, and we have a sales process that turns an Airbnb inquiry into a contractor booking that we don't pay any commission for. All right, it's a marketing tool for me. But I could, if I wanted to, turn that off and I would still make profit and good profit at that. And that's where everyone needs to get their short-term rental business to. So, few home truths here. And this is going to trigger a few people, and it's meant to, but you really need to, if it does trigger you, think about why. So there is no direct booking strategy. All right. There's plenty of people out there selling direct booking strategies and magic websites and, magic, this, that, and the other. There is no direct booking strategy. Knowing how to buy the right stock increases your direct booking game. That's it. That's the secret. It's not a website. It's not SEO. It's not Google. It's not OpenRent. Knowing how to buy the right stock increases your direct booking game. That's it. That's the direct booking secret. Knowing how to stack stock in the right locations attracts more direct bookings. Not paying more for Facebook ads or running more email campaigns or having a great sales process behind the scenes or having a fancy little logo as you picture on Airbnb and then diverting them to your website. Knowing how to stack the stock in the right location attracts more direct bookings. Knowing how to buy stock with the right margins suitable for contractor rates increases your direct bookings, because then you can compete. You can offer the rates that they want to pay. You got to remember, contractors are a business. They want to pay as little as possible. You need to put yourself in a position where you can go to their margin levels, win the contracts, and then on mass, on volume, on length of time, and all the savings that you get throughout the business model, you make profit. That is the direct booking secret. That is how you increase your direct bookings. Deal sources haven't got a fucking clue what they are doing, right? There is no shortcut to success in this game. If you think you can go to a deal sourcer, buy a deal, and it's going to make 80%, occupancy, and you're going to make $1,000 a month, you're fucking deluded. All right? There is no shortcut to success in this game. You have to learn the skills. You have to level up your skill set. You have to get the experience. You have to work with the right people. And that is how, and then over time, you will build the right portfolio. If you think you can, I work in a job, so I haven't got time, blah, 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 blah. If you can't find the time, then you deserve to be shafted by a deal sourcer, because that's all that's going to happen. Deal sourcers have never ran a short-term rental business. So how the fuck can they put out figures? How do they know what occupancy rates are? How do they know what the costs are? If the deals were that good, they would have them themselves. So don't be fooled by the crap that gets punted into your inbox day in, day out. And what I don't see deal sourcers doing is sourcing contractor B&B style properties. All they're sourcing is flats. Why? Because it's easy. Why? Because they're low cost. People go into them because it doesn't take much to set up. The rents are lower. They don't fucking work. I'm telling you, they don't work. So you've got to give yourself a check here. If you want to be a successful property investor, you have to put the time and effort in. I cannot tell you how many hours I've invested into this. I cannot tell you how many thousands of viewings I've been on. Like how many guest referrals, everything. It's hours, hours, hours invested to get to where I am today, where I get to travel the world. All right, I'm in the UK. It's not the nicest, but I'm escaping out of here next week back to the sun. But, I get to travel the world. I left my home in Dubai at the end of May. I've not been back. I'm not going back till September. I've been traveling the world. This is the consequence of the work that went in to learn a skill set. I never once have bought a deal off a deal sourcer, and I never will. And I always advise my clients not to. You've got to learn the skill set. There's no way you can do rent to rent and management. And what I mean by that is there's no way you can get a rent to rent deal and give it to a management company. Okay. You can't do both. It doesn't work. There's not enough profit margin. Rent to rent's the highest risk anyway. You need to be keeping as much of that profit into your bank account as you possibly can. You cannot, if you buy a deal off a deal sourcer on a rent to rent model and give it to a management company, fucking God help you. All right. You cannot do rent to rent and give it to a management company. There isn't the margin. If you want to do rent to rent, especially on the lower end stock, you've got to run it yourself. And even then, you may or may not make money. Investors will invest in an inexperienced person. And I hear this all the time. Oh, well, I can't purchase because I've got no experience. I'll not be able to raise any money. Total bullshit. I raised over 100K in the first few months of starting my property business because I had a personal brand. And that's how you do it. Building a personal brand will ensure you attract funds. And then you can build your own portfolio through other people's money. But you have to put the time and effort into building a personal brand. Everything is an investment in yourself, and everything takes time and effort. There's no easy route. Anybody that says that you can build this portfolio, you can build that portfolio, and it takes this and it's dead easy, walk away from them straight away. You want to build a portfolio, we'll do it. I can show you how to do it. I'm not going to say it's simple, but I'm not going to show you. It's not easy. You've got to put the hard yards in. If you haven't got in good systems and processes, you'll never be free from this business. You'll never be able to escape. I had good systems and processes. I had the wrong staff. I had the wrong staff. I had the right systems, process, blah, 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 right? You have to have good systems, processes, and staff if you want to be free from this business. But again, it all comes back down to the property that you're sourcing. Source the right property, which is the lowest stress, the least amount of hassle, the highest profit, then you don't need masses of stuff, and you get to get your time back. I've mentioned this before, but external cleaners, linen maintenance people will let you down. They will destroy your business over time if you continue down that route. They will continue to drop the ball. You'll get a bad review. That bad review compounds to the next bad review. That compounds to the next bad review. I've been there. We had our Airbnb reviews down to about 3.6 at one point. I've had an Airbnb account shut down because we failed, right? At the time, we were relying on Airbnb from our bookings. It was panic stations all over the place. Why? Because I was relying on external factors to run my business. Only you and your staff, and investing in your staff will produce a good short-term rental business. Rent to rent will at some point turn on you. Yes, it might be good for 12 months. Yes, it might be good for 18 months, but at some point it will bite you. It will burn you. There'll be something that happens. You'll have an unexpected bill. The heating bills will go up. The aircon bills will go up. The rents will go up. The bookings will drop. There'll be saturation in the market. At some point, rent to rent will bite you in the arse. And if as I said, if I had my time again, that's what this is all about. I would steer away from that model. I would complement it once you've got your portfolio built up, like I do. So there are some large houses that I rent because I know that we can facilitate the contracts, because I know the contract. Like we already know. Like, so in the last year, we knew we needed 100 rooms to fill for this year. So I knew what I was buying. I knew what I had in the pipeline. So I was like, right, we've got about 70 rooms from what I'm buying. So I need to find 30 rooms. So I went and sourced those houses, but that's from the contracts that I knew we already had. So I know what margins I've got. I know what occupancy is. That's different to just go and rent to rent, chuck it on Airbnb, hope for the best. Management will hold your business back tenfold. It might seem like the lowest risk because there's no money in, but it will hold your business back tenfold. 100%. I would over time, in the next few years, I will not have any management clients. I love my management clients. The only ones that I've got now are the ones that I'm staying loyal to because we've had them since day one. They supported my business at the beginning, and I will continue to be loyal and look after them until the day that they don't need our services. But I'm really not taking on any more major management stock unless it really suits the portfolio and it makes enough profit to make it worthwhile. If you don't build a brand, don't expect to win big contracts. Don't expect to get all the big contractor gigs and get your places all full if you don't build a brand. Okay, property is no different to any other business. You need to build a brand. You need to be marketing. You need to be building a personal brand as well as a company brand. It is vitally important. Okay, so I'm gonna that's kind of my rant, my advice, and hopefully it's been beneficial. I am gonna come on to some questions. Just before I do that, I do want to obviously enlighten people to what goes on behind the scenes with me and my clients, and how you can maybe get involved if any of this has, sparked an interest into, right, this is what I want to do. One thing I will say is my one-to-one coaching will, well, firstly, the idea is it will get you 4 owned assets in a 12-month period, no matter where you are starting from. That is kind of how I work. So 1 per quarter, we find them, we fund them, and we fill them. That's kind of what we do. And I work with you on a close proximity basis. On that basis, I can't take loads of clients on. So I committed the other day to opening 5 spots for this. I've got 3 left, and then that will be it closed, because I like to live my life. I like the freedom, and I only, want to work so much. I'll be totally honest with you. But for those that I do work with, we get the same results. I'll tell you who this program is not for. If you've got no money, don't bother applying. I'm not interested in working with you. I think you have to have some money behind you at all times. 1, because you need to be patient. 2, because I think it's always good to just have a bit of cash behind you in case money gets stuck in deals, or in case you just need to pivot slightly. So if you've got no money, if you're just starting off, my coaching is not for you. Plus, you'll not be able to afford it. You will need to invest in yourself. I haven't gone through what I've gone through. I haven't spent over 700K in myself to just give it all away for free. My time is very valuable, even more so now. So that's not me being arrogant. That's me being experienced and having wisdom, and knowing that I can save people millions and also create millions for them. And that is, value in itself. Again, if you don't value a mentor's time, experience, or wisdom, don't bother applying. If you're not willing to do the work, don't bother applying. If you are looking for a savior, don't bother applying, or guarantees, because I don't offer any of that. I will give you the best of my ability to get you to where you are. I will share everything I need to and give you the helping hand. But one client works, one client doesn't work. Why? It's not down to the coaching, okay? Because they both get the same. It can be the individual, it can be the work ethic, it can be the way that their personal brand's perceived, it can be things that they're saying. So coaching is not a savior. Mentorship is not a savior. Okay. But for those that are the right fit, you will get insane results, and I will protect you from blowing fortunes. And if you're not open to be held at a high standard, don't apply. Okay. Because I hold all my clients to a high standard. I push you and I hold you accountable. But you have to be self-led and radically responsible for your own results. If you are that person and you want to build a multi-million-pound contractor B&B portfolio, then send me a message on either Instagram or Facebook after this call, inquiring about it. But I will say it is an investment in yourself. It's not cheap, and you're going to have to work hard. So if I haven't put you off and you send me a message, then you're going to be a great fit. And as I said, I've got 3 spots available. So let's dive into some questions. Let me just quickly grab some water. If anybody on that's just how Instagram is watching and has questions, just pop them in the chat as well. Right. I know you have relevant knowledge every day. I see these hands-off investments for rent-to-rent, SA, for example, 5 to 10K investment returns over 3 years, 20K. What's your thoughts? So this was actually a question put in before I think I went on my rent-to-rent rant. For me, I just think, as I said earlier, if you want to buy a deal off a deal sourcer, just give up property now. That is my honest opinion. I think if you're not willing to do the hard yards and understand the industry, you're just asking for trouble, especially on rent-to-rent deals. But purchasing deal sources, I'm still not a fan, and I still think you need to learn it yourself. And I think you'll serve yourself better in the future by learning it yourself. But you've at least got a bit more of a margin to work with in a property and an asset should things go wrong and they shaft you like most of them do. So for me, I just stay away from deal sources. Instead of investing 3K, 6K, 5K, whatever they charge, invest it in yourself and learn the skill set. Do the hard yards. Stop trying to cut round corners. Do the houses need parking? How do you find the right area that contractors will stay? Is there a certain type of house you look for? Yes, they need parking. How do you find the right areas? I've got various research tools that we use to be able to find them. And know which areas work for contractors, where developments are going on, that sort of thing. And yes, there is a certain type of house that I look for. Again, that's kind of what I show everyone on my Contractor B&B coaching, and that is why it works. All right, it is very much to do with the property. When you know what type of property to source in the right location, the rest of it takes care of itself. All you literally need to do is then market it. And again, I show you where to do it and how to do it. And then the rest of it takes care of itself once it starts to gain the momentum. Is the model buy a house, then rent out monthly or flipping houses? No, the model is buy a house that's perfect for contractors wanting to book it for mid to long term, but on a short-term rental price. The reason why the reason why I've had someone in for 18 months, and you might think, well, why didn't they just rent a house and furnish it? Because it'd be so much cheaper. 100% it'd be cheaper. They're paying like 5 times the rent. Okay, if they just rented the property. The reason is with contractors, right? And we get this quite a bit, is they still need the flexibility, even on the long-term projects, because their staff are fucking idiots half the time. No offense. And what happens is they end up doing something stupid, and then the contractor gets kicked off the gig. And we've had this a few times. So even if they know they've won a 2-year project, they still might not get the 2-year tenancy because someone might do something stupid. They might drop a ball, whatever, and they get kicked off the project. And that happens. And that's why contractors need flexibility in the accommodation. That's why they'll pay the rates we charge them. And that's why it works. But you need the right property in the right location. I think I've just answered that question. One setup, how do you target contractors solely? How do you acquire funds? So funds is building a personal brand, building a personal brand, and knowing how to go and ask for them properly to the right people, knowing how to present yourself online to the right people. That is how you acquire funds, by building yourself a personal brand and knowing who to ask, and also how to package the deal up so that it is attractive to an investor, even if you have no experience, because it is safe. And when you can create safety and trust, anybody will invest in anybody. And that is ultimately what I teach you how to do. How much do you charge for your one-to-one mentoring? A lot. But it isn't a drop in the ocean of what you get out of it in terms of the ROI. And as I said earlier, if you do want to discuss that further, you are willing to invest in yourself, you have money, then ping me a message after this and we can chat about it. So thank you so much for your time. I hope this has been useful. And I've loved it. I have great questions. Been loads of people on Instagram as well, and all of the other channels. Thank you so much. It will be getting posted on it's on my podcast and on the YouTube channel, so you will be able to rewatch it back, and I will be sending the replay out as well. Have an awesome weekend, everybody, and thank you so much for your time.